Good morning, afternoon, or evening, traders, wherever you're joining us from. Welcome to SSFTG, where we trade everything from futures markets to the metaventure real estate. If it moves, we trade it. John Henry here. Welcome to the market review and recap and forecast. If this is your first time here with me today, welcome, my friend. Pull up a seat and hang out for a while. A quick review before we jump on in. All of the strategies and techniques and everything else that we use is fully detailed and described with over 20 hours of video course material over in the Day Trading Academy. The Day Trading Academy brings home everything that you need to know about trading to get going, and if you need more info, we also have everything detailed as far as the setup specifically in the VIP live trade room section going over the trade plans area. The first thing that we're going to need to do to prepare for tomorrow is to check the news. We do not want surprises when it comes to the news side of things. That's a real bummer. And looking at the news tomorrow's Friday, and it's Good Friday ahead of Easter holiday. So that means that all day tomorrow we are going to have light volume trading for Good Friday. And although the markets will be open, they will be moving and they'll be jumping around, chances are those are the kinds of days that if it's going to be volatile, crazy, aggressive, those are going to be the days to do it on. Luckily, in this case, the news calendar is relatively light aside from the holidays. At 8:30, we have the New York Empire State Manufacturing Index for April, forecast 0.5. Previous was negative 11.8. Beyond that, it's just the industrial production year over year in 9/15. And the 15:30 CFTC crude oil speculative net positions, all the speculative net position stuff, that really doesn't have much of an impact. As far as the news is concerned, really the biggest part that we have to worry about is that it'll be Good Friday. Now, once the news is taken care of, we can go through the charts and break down what it is that we expect to have happen. And if we look at where we are at the moment going into the end of the session here, the index markets, well, at least the NASDAQ is currently down 2.36%, the S&P down 1.26%, and the Dow down 0.33%. Still have a little bit of time until the market closes up yet, so that may change. But gold is down 0.46%, crude oil's up 2.15%, Bitcoin is not doing so well either, it's getting kind of beat up today there too. Starting off on the NASDAQ 60-minute, first off, one big thing that stands out that we've been talking about for a while is this wedge break and completion, breakout, pullback, rally higher. Since that breakout completion, they attempted to break above that last swing high way over here. And well, I mean, technically it broke, right? It did break above it for like a second and a half, and then it was gone. Got obliterated all the way back to the downside. So if the bulls are going to be trying to come in on this is the reversal, and the hard stop point is underneath the low. If the longs lose their grip under the low, they're going to lose their grip on the long altogether. So the majority of bulls are going to be looking to buy this better pullback if they can get it going, and that doesn't start until down here. Let's see, what's that going to be? 13,679 quarter down to... Get this over here. That should be good right there. Down to 13,501.75. That's going to be a way bigger zone of interest for the bulls to come back and find some support in to try to kick the market back out of, because that's where they can actually fit their risk versus their reward back to the top and not have to risk a ludicrous amount to make it work. As far as the bears are concerned, we do have the bearish rotation off the highs. We had the L5 into the L2, and now we've got another almost L2. Ooh, man, they just missed it. Technically speaking, that's an L1, and now we're rotating back off down to the lows. Really, the big thing that we can see here, if we're looking at it from a volume perspective, assuming that the buyers are trying to buy on this initial move down, looking for a continuation phase up, and, well, it didn't work out so well. POC's right at the top. They really didn't win any fights at all. And when the market starts breaking down to a new low, it doesn't change. The volume was so high up there that the POC doesn't change until way down here on the new low over here. So with that new low then, obviously the bulls were stuck here and now they're in here. Their average point's going to be hovering about in the middle. Not even close to taking that out before squeezing back down once again. And with this continuation lower into a new low, we do not have a POC shift. Another new low, no POC shift, and now we just made another new low, and there is still no POC shift, suggesting that the bulls haven't necessarily put a bottom on this move yet, and bears are still driving. And that would make sense, considering that we're looking for the 13,679s. From the bears case, starting from the bottom all the way to the top only, and just kind of seeing how the market responded to this move to the upside, this will give us an idea as to how the market reacted, and they put in their POC up at the top. If that's the case, downside objectives would be based off that as an average and a stop above the highs, meaning that their targets are going to be floating a little bit further down. And if we move this around a little bit, I know it's kind of hard to see, but we've got the 2-to-1 objective, which is hovering right here, and that is just around the same spot as all of the other zones of support. This is going to be a big hotspot area if it can get going down a little bit further, but at the same time, the bears at the moment are definitely in control. Over on the S&P, we have a very, very similar perspective here in the sense that we had that earlier wedge on the bottom. And if anything, they just have a wider wedge down here. It never really gave a clean false break. And if anything, the false break would have been on the bottom. After the false break on the lows, it goes screaming all the way up to the highs. And this one, again, trying to challenge those previous major swings. And they were able to break above it. But after breaking above it, trying to use it as support, it broke back down underneath it, and those longs that were long are no longer long, and they're out of the way. That creates this bear descending resistance that just isn't stopping, falling apart. If we're looking at all of the bulls, assuming that buyers will be buying into this pullback, looking for another leg up, we can see how they responded. POC right down at the bottom. Beautiful POC area for the bulls to rally it back up. At the very least, they were likely given scalpers targets. We go down to a new low. No, not even a chance to get out at the POC. Still way back up there. And the S&P has not made a new high. And we do have a brick volume chunk down here that just is getting absolutely annihilated. If those are the bulls, they are under a whole lot of pressure right now. If the buyers are looking to come in with a reduced risk, they do have the ability to use this swing down here instead as their stop point. But let's be real, chances are they're going to have their stop underneath the major low because it's just that close. They might as well. Targets for the bulls would make a lot more sense to see them trying to target the inside of those highs rather than back up to the extremes. They'll save themselves a little bit of a headache by targeting ahead of that. And that puts their zone of support right around 42.15 to 42.54 or so for the buyers to try to kick it back up from there and reach back up towards the highs. Out of all of the index markets, the Dow honestly has a bit of a different tilt, and this has been the case for a couple days now, where we've been seeing the Dow giving us a little bit of a heads up like, hey, I know the other index markets are doing XYZ, but take a look at this, right? It's kind of like a little bit of a warning sign, if you will. Falling resistance, working its way down, very nice. If we make this into a channel, we have ourselves a nice little potential flag pattern. Up, flag, pull, all the way back up again. Really nice structure as it stands. If that's the case, the buyers are going to need to shift some form of a volume node or POC in their favor, and they're going to need to show up with some decent strength. And as we can see, we just cycled off the POC at 34,729. Well, that big wick on the top there doesn't exactly help anybody. That makes life a lot harder. So if the buyers are going to be coming in, one of two choices. Their stops are either underneath this low here or way the heck down here. And there's really not much in between. So if the buyers are going to hold it back up to the highs, that means that they can get their stops in nice and tight underneath a more recent low and try to look for a cycle back up, probably targeting inside of the POC. To inside of the POC right there. And that would put the zone of support at 34,240 to 34,180 to try to kick the market back up and get that bounce moving. Anything really above that, and it's going to be kind of challenging. There's just too much resistance in the way for the buyers to be able to work their way through. And that POC break is a shot, but they didn't break above that last swing high. It takes away from it a little bit. On gold, we're starting to roll back to the upside again and breaking away from this sideways gross. One of the big things, obviously, is this monster trap on the lows and the concern of, well, wait a minute, is this a trap on the highs? What's going on? Is this a megaphone? Is the next question. We've broken above all of the other stuff, the falling resistance here and the falling resistance here, and now it's rising resistance, which is effectively telling us that we've got a possible bull trend. And if we look at the overall cycling, we've got a moving average cross. Prices are firmly above the moving average, so we can look at this as a patterning perspective too. From a patterns perspective, we have an L4 or L3 holding off the lows. We have that disappointing L2 into a strong L1 re-up and another L1 pullback. If the bulls are going to hold here, they need to do it here. Because if they can't do it here, chances are we're going to get that deeper pullback to re-challenge all of this ludicrous amount of support down here in the 1920s. And if we were to draw a volume node from the top down, there's so much transactional volume down there. I would be blown away if we don't have something down there. Yep. And there's the POC. So as far as the POC is concerned, we can see the sellers trying. Uh-oh, now they lost their grip. They just need a pullback to get the heck out of the short and reverse back up to the highs. Crude oil is catching some nice climbing momentum, but really haven't broken outside of this wedge. I mean, if anything, we've gotten incredibly close higher low. We do know that that is an L6. If we measure off of the low to the high, we've got an L6 test almost perfectly before reversing back up. Before the L6 is confirmed, though, we need to break above a new high, and that would require 117 or further to get that job done. To be fair, looking at the bulls case here, the bulls are getting a very, very strong lift to the upside. So they're doing plenty of work here. And if we look at the overall rotation from the bottom all the way up to where we are now, we can kind of gauge how the market's responding to this overall drive. And well, we can see that they got a POC landed right in the middle at $100.71. And the above that one, it wasn't even enough to get a POC, and we're breaking further. Anytime we have a POC in the middle of the move, generally you can measure from the bottom to the middle volume and then use that as a measurement tool to the upside to kind of project how far the market is likely going to try to reach up to. Now, it's not a perfect exact science, but generally speaking, until we've reached up to this area, the market's going to try to push up. And you can see we have gotten very, very close to that area of interest. That might mean that in the short term, the bulls are kind of destined for a bit of trouble. They might need more of a pullback to really reload and get things going. Now, it did not make a new low, so we do have to factor in the bears as well. If the bears are going to be taking it, they would have needed a new low to break down underneath 92 so they could put their stops above the highs. Because they don't have that, we have to look at smaller swings. And the smaller swing high would be down to here, up to here, down. They broke above that swing over here, tried to get a new one going, and that failed, rotated down, popped up, went down, and it actually ended up being more like this. Going down to the next one, over, down, little guy, and then a break. So technically speaking, from a trend perspective, because of the way that this crazy gap and crazy swing low happened, we don't actually have a trend shift on the bigger perspective. It's only on the smaller perspective that we have that going on. As far as upside objectives go, the buyers have a shot here, but we do also have to take into consideration what happened on the way down. Since this is such a strong move up, there's always that thought of, well, I wonder if they're trying to get out of break even. In the overall move, break even was right there. They've already got it, and now we're starting to climb above. The only other thing that would be above break even that they might be trying to grab would be max greed, and max greed is effectively all the way down to the low, back up to the break even point, and that target is right here. As if we needed more stuff in the exact same spot to tell us that there's going to be resistance there. Everything is saying that the market should keep going a little bit further until we get up into those 108s, and then pretty much all bets are off for the bulls until they break above. And then on the cryptocurrency side of things, Bitcoin got slapped around a little bit today with a pretty heavy decline. Overall, we had the initial rally up, which was off of the L4, and the L1 bulls did have follow through, but really, really poor follow through, just enough to get a scalper's target before rotating back down. If the buyers showed up at the L1, they didn't have very much of a bounce before having several opportunities to get out at break even. Otherwise, they've been negative the whole time. The next rotation down to the L3, nobody even showed up to the party, and any bulls that did were given a chance to get out at break even. Every time we get down into one of these zones, it falls apart. This is the first time we've actually seen some stability on this L4. And if we measured this up from a swing perspective as well, back up to the highs, knowing that they're going to want their targets at least up inside the high, swings, they're going to start looking to buy in this blue box here. And that kicks off right around the 39,000 range down to probably a little bit more aggressively 37,400s. That's going to be the hot spot of interest for the market to find the bulls to kick the market back up, because not only is that a major zone of interest on the L4, L5 transition from earlier, it's also where the earlier bears got stuck in. They're being given a bone to get out at break even. And we have the longs being able to buy down here with targets inside the highs and stops just underneath the lows for a very, very nice probabilistic 2-to-1 trade setup. All right, well, that's going to do it for today's market recap, review, and analysis. For you members out there, we'll see you bright and early in the AM. And for the rest, thanks so much for watching and hanging out with me today, going through all the charts and all that fun stuff. If you have any questions or anything else, feel free to shoot me an email, jhb@ssftg.com. Until the next one, though, have a great one, and we'll see you then. Thanks. Bye.
We do it now. We do